Geoffrey Dennis is with us, Independent Emerging Markets Commentator. Geoffrey, good to have you back on the program. And by the way, another separate part of that press conference, he did mention India as well. Once again, talking about why are we sending, some amount of money, and but also that tariffs are very high, one of the highest taxing countries, etc. The thing is, our exports to the US, India's exports to the US are not very large at all. Actually, amongst emerging markets, our exports to the US are probably, as a percentage of, respective countries' GDP, it's perhaps the smallest, one of the smallest. But that is true, but it is also true that tariffs are one of the highest. So maybe tariffs will go up. But impact, because exports are very small, are pretty manageable. They're going to be small in that sense. How do you see this, Dennis? What's the implication, really, for markets?
Well, the data I've seen shows that India has the 10th biggest trade surplus versus the US, which means it's not really right in the forefront, I think, of Trump's focus from that point of view. It's obviously a smaller deficit, or I should say India's surplus is a smaller surplus than China has, that Vietnam has, that Korea has, etc. So I don't think that's the issue. As you rightly say, India doesn't export that much to the US. But obviously, Trump is on this tariff gig now, reciprocal tariffs, if you want, if you like, where he's saying, if countries overseas have got high tariffs, which India does have, well, we're going to put high tariffs on their imports as well. Now, it's been the case for many years, as you will know, that developing countries trying to build for the future from a low base, very often do try to protect their infant industries, which is a classic economic argument, with tariffs. It's always been the case that poorer countries, developing countries, emerging markets have higher tariffs, than developed economies. And I think that it is what it is. I'd be very surprised if India is absolutely right in the forefront of this reaction that Trump is coming up with. I think he's focused a bit more on other countries, frankly. But yeah, he has mentioned India, so we have to watch it.
Yeah, absolutely. And India has been responding as well by lowering tariffs on things like Harley-Davidson bikes and bourbon whiskey. So some of it is already happening. Geoffrey, hi, good morning. But, beyond tariffs, the other problem and worry for India has been this homegrown slowdown that, frankly, came out of the middle of nowhere. I don't think the market was ready for it, and therefore the correction. What do you make of it now? We've just gone through another earnings season. The forecasts, for GDP growth for the next year range between 6.5% to 6.8%, so to speak. Do you think this is just a temporary blip and therefore a good buying opportunity for Indian equities, or could this be more prolonged?
I think it is a good buying opportunity for Indian equities, but there's a lot in your question, if I may say so. First of all, I suspect that the drop in GDP growth has been too precipitous. It isn't really quite as bad as those latest numbers would have indicated. I think that will also be, to a certain extent, supported GDP growth going forward by the fact that the RBI has now begun to cut interest rates, although how much more they're able to cut interest rates remains to be seen. And also because there were some tax cuts, of course, in the budget. So there is some policy support here. So I fully expect to see Indian GDP growth stabilize, possibly bounce up a little bit. It is still the best by far GDP growth in the emerging market arena. And yes, earnings, of course, are very important, but I do simply think that the sell-off you've had so far this year is getting a little bit overdone. I think there's one other point that I'd like to make on this, and that is that in the event that there is some sort of ceasefire between Russia and Ukraine, peace settlement down the road, what does that mean? That means Russian sanctions on Russia come off, and that probably brings Russian oil supplies up quite considerably, and that's going to put downward pressure on the oil price. So I think oil is going to stay quite soft over the next several months, and that will obviously be helpful for Indian inflation.
Well, indeed, Jeff, that's the hope. If there is a deal out there, and there is a peace deal between Ukraine as well as Russia. Lower crude prices, a tailwind for the Indian macros as well. But Jeff, what do you make of it? In the last 6 months or so, everyone's talking about the Indian markets relatively underperforming if you're looking in comparison to the North American markets, or even if you're looking at China. Do you think bulk of this underperformance is done now? And from here on, given the price correction that we have seen and given the realignment we have seen, do you think Indian markets can outperform among the emerging market basket?
I think they will start to recover this underperformance. I think it'll take a little bit of time. I mean, with China, which has done so well this year, there's a number of things going on, which are sort of individual events, if you like. First of all, you've had the AI news out of China a couple of weeks ago or so ago, DeepSeek. You've also had the other day Xi Jinping meeting some of the business leaders, which he's not done for a long period of time. That created good sentiment. And of course, you've had a situation where a lot of investors decided to go into 2025, particularly once the dollar started to drift lower, by closing their underweights in China and getting more bullish. And that process, I think, has probably gone some distance. Now, for me, the Chinese fundamentals are still poor in terms of the property sector and in terms of the lack of consumer spending growth. So I think this rally in China will blow itself out. And I do believe when that starts to happen, India will start to get a bid again from FII investors. And although obviously India is expensive, I would tend to think from here, India will start to cut that underperformance against emerging markets and even against China over the next several weeks and months.
All right. A good conversation as always, Geoffrey. Appreciate your time here on CNBC TV 18. Thanks indeed.